welcome to Successful Trading for yet another episode of the Daily Market Recap for April the 9th, 2020. The story for today could well be, it was the most bullish of times. Then it was the most bearish of time. In the end, we made money early with call options. Then we made money late with put options. Without any further delay, let me show you how. All right. Let's start with the major indexes and summarizing what we have been seeing here early in April, particularly for this short week. So we started the week gapping up from last Friday, and pretty much actually from this is Friday from last week, and then we started Monday here with a huge gap up on SPY from 248 to 257. So from 248 or so, if you want to call it 250, thereabout, we gain about a good 30 points in 4 days. That's, as of now, we are really start to see for the first time confirmation above the exponential moving average 20. So the one left for us is the longer term momentum, the moving average 50 period, so which we bounced off and closed at 278 22 or thereabouts. Remember a few days in a video where we brought in the Fibonacci, so that's not here, so we can bring them back to try to get a closer idea where we stand right now here on SPY. So just approximately here, and I'm gonna make it bigger. It will be okay if it will click for me. All right, so okay, so 278.27 is 50% of the retracement. You can call it a coincidence within 5 cents that we stopped exactly there today. I think not. So that's, and then you can see here on Monday exactly where we stopped, 38.2%. That's a Fibonacci ratio on there. So the question, your next question could then be, oh, well, then could you tell us where the next major level is? Yes, I can. After 278.20 something where we stopped today, the 61.8% ratio, it's 292. So this is a guide to help you in picking up your strikes, to get an idea of, hey, where the potential, the next potential resistance is, if the action move into that direction. So it will be interesting here after the long weekend to see how we get going. So that was the action on SPY. SPY was not the strongest today. SPY was okay. So if I had to classify them between the Russell 2000, IWM, SPY, and QQQ, the strongest was this one, IWM, because all day long it gapped actually. It gapped heavily. All of them, they gapped heavily. About 8:30 after the initial job numbers came in. I guess the market didn't care that we still have over 6.6 million people filing for benefits, employment benefits. So typically the markets already process some part of the news. So since the news came in with a number that you have previously seen the previous week, again, those numbers are coming on Thursday. So by now, while we are in this pandemic area, times rather, those numbers, let's say the number of cases or the number of the death toll across in the US, in the world, especially what's going on in Europe, they come in mostly, they come in every day, but Thursday is the day where they coincide with the numbers from payroll, the job claims from the US. So that makes it a binary event in the sense that the markets will either react either way. So that's volatility. It's actually something that is good if we trade option, meaning that the market is moving. Now, in order for you to take advantage of that, you need to be flexible or nimble. That's a word, that's an adjective that's very popular in the trading world right now, to be nimble, meaning, hey, It's not because you see something going up, then you can only think, oh, I have to be bullish and buy calls all the way. And today was a very good example of that. Tuesday was another good example of that. So here we're talking about the fact that IWM, the Russell 2K 2000, yeah, was the strongest, and it finished actually when the market lit in the trading session, when the market was selling off. It did not budge. It was just staying steady right around close to 124. So we had the IWM calls for next week at a strike of 130. We didn't make the same mistake as we did about a week ago or so. We took profit on them. We did that. So that was right off the bat after this major spike, gap up on here. So that was good side on there. The weakest one this week actually was the Qs. Or today, not this week. I mean, everybody went up, but the Qs they finished red on here. So notice how this candle is green here, and on this one it's red. So something will have to happen to all of these indexes next week, because earnings season starts on Wednesday and in full potential on Thursday. So we expect that, and then we have this inside bar here. So a lot will be, so for us next week, our main focus is going to be on QQQ to see what type of volatility they bring onto that, to the upside or to the downside. If they're trying to go to the upside, oops. So our retracement levels will be what? I'm just gonna put it really all the way to the end here. So, and let's make it bigger. So 298. So there was a dark print from Floalgo today at 259, I believe. So we closed at 286. Interesting. So the next level, the 61.8% is at 209 of natural resistance. So we have a long way to go. The week is going to be long. So patience is going to be key in terms of being able to wait for setups to come. During earnings season, you can actually trade the indexes maybe better than because then they encompass the entire market. I'm going to show you at the end of this video some of the stock that we will be looking, individual stock that we will be looking for earnings. The banks mostly really for next week, and then an airline toward the end. But a good way not to to have so much exposure is through the indexes. So the small cap, the techs, that will be the week after, with the Netflix of the world kicking in. That will be interesting. So over the next 2 weeks on here, definitely we will be looking into QQQ. That's something to keep in mind. So coming back to today, the individual stock that we traded. So from, let's say we're gonna save Zoom for last, we're gonna go where? We're gonna go for the first one that's really gets kickoffs. Just got the day started. It was Royal Caribbean, right? Royal Caribbean, we have been fighting with it the entire week, and it was almost a lost cause, right? Because we have positions that expire April 20. That's the monthly expiration. So, but in terms of setting up day trade, so after it got over this moving average. So for us, we set up, was it yesterday or the day before yesterday, 42.5 calls. And Lord behold, yesterday we could never go above that yellow line, the moving average 20. So we closed at 37 something was it presenting. So the little money that we put on for 42.5 call, Lord behold, it gapped up and it went to 45. So we sold them nicely. But that wasn't it. That was early. So if we go to the 15 minutes, here you go. So here, remember we've talked about this. Why am I selling it here? Because it's the condition is called overbought, in the sense that the price is way outside of the upper Bollinger. The upper Bollinger, which I'm reading on the right hand side, right? Here, this is the box I'm reading in. So if you can read that there, it was at $40.68 and the stock was trading at 45. So we had 42 calls, well in the profit, expiring on a Friday. That's good. So in the WhatsApp little chat room that we have, I told people that here I'm gonna be taking Lotto, so either it's gonna continue up, but my heart wasn't into that, or it's gonna continue down. So I took 42 puts as well. So within the hour, 15 minutes, 15 minutes, 15 minutes, we're able to make money on our overnight position, swing trading on calls, and then we're able to make position on this hedge that we took here on puts at 42. And then after that, we left it alone. It wasn't doing much of anything. At some points here, though, I'm not sure exactly. I think after this, noticing that this was a major, the VWAP. If you don't have VWAP on your trading view, that's something that you will be getting when you get the pro version. I don't think it's available on the free version of TradingView. So after this rejection on here, so it was worth actually, no, not precisely, it wasn't there. It was here. It was here. The thought process here was what? And this is something important to take notes on. Because this paid well on here, and we sold it very at the lows, right? So close to the 40 something. So for us, the argument was that, the reasoning was that, let's take that money safely, put it into the account, and then if the momentum is to continue, because we are below VWAP, if the bearish momentum is to continue, then we're gonna use very cheap 40 puts. That's what happened. So those puts, they were not that expensive. So a lot of time passed by, and literally with 2 hours left, then the movement started. These 42 puts that were taken here on this candle, all the way, I have to wait all the way here, and they were sold. Actually, we sold them very, which candles did we sold them on? Did we sell them on? I think on this candle, really, not even this. They would have paid more, but they gave us what we wanted out of here when the price was, I think, 39 something. Yeah, or maybe the beginning of this one. Yeah, the beginning of this one most likely, because here the price is below the lower Bollinger Band. I'm reading the lower Bollinger Band here. So at that time, the lower Bollinger was reading 39.51, and we were well below, but it went to 36.76. Late money, serious money. So actually, the late money today was much better than the early money. So meaning that the money on puts. How? Let's take a look. For instance, XOM. This is a part of the stock that's were studied in last night video, right? So and today there was that meeting with the OPEC that was supposed to somehow tell us whether or not Russia and Saudi Arabia they have this, they will decide to cut off production. So well, a lot of people were in anticipation of that. Obviously, this thing they gap up big time. So if you had played that event before, you made money on calls here. We did not have XOM. We did not have XOM overnight as a swing trade. So hey, bad for us. We had another one that I will show you. But here, at this time, I actually got into calls here. Yeah, after this candle, and then the wars happened. Meaning then now I had to turn a losing trade somehow into a winning trade. And here we took 45 puts because expiring today, the same day, just because, hey, after this series of rejection, so 45 puts got us a nice ride. And again, they were sold early because again here, this is below the way we sold them early, relatively speaking, compared to the potential. I think actually they were sold on this candle compared to the potential that they could have. But we also got 44 puts, very cheap ones, and they ended up being in the money overall. And a big money would have been made here, obviously, because all at the time, all the crude went from being positive in the morning. I follow all of that on a little app, investing.com app. That's what I use, as you know, on from one of my blog, one of my posts on the blog successfultradings.com. So that the fact that all after that event, all it went from green, super green, plus 6% or so to red. I think at some point all was trading was minus 9% or something. So the stocks in that industry just plummeted, and we took advantage of that. So we did not have this one overnight. The one that we have been tracking overnight for a few days, I'm not sure if I talked about it in yesterday's video, was this one, OXY. We have a position expiring next week for monthly on calls. So those calls, they were appreciated here today. And we took some early profit on partial profit. And then same reasoning, we set up, actually, you know, when it was about 17 something, we set up some puts for the retracement, because that's what stock do. When a stock gap up and is trading on here, this is a haven for a swing trader or a day trader, because on option, you can decide just to say, okay, either is a binary event, either it's going to go up or it's going to come back down to the mean. These yellow, and they are the mean, they are the average. So when the price is much higher than that, correction can take place and we can benefit from that. So in that sense, 16 puts was our way to do that. And that was a little bit of a rough trade, because they came in, they hit well below 16, so in the money. Not sure exactly when we sold them, but that wasn't the smart way. I mean, yeah, it's Friday, so 2 hours in, you had to sell them, right? But if you were to hold those 16, look what happened here. So for us, here on this candle, we decided that, you know what, we're going to trade 15 puts, and that's what we did. Those beautiful trade, because they were cheap, and we rode them all the way to here. There, yeah. So that was not. They were cheap, and because Friday you're gonna always have very cheap options, just because it's the expiration day. So if the stock market is making this type of moves on Friday on expiration, it's relatively not easy, but the potential of having good trades is there, because the options are not as expensive as, let's say, on Monday, at least the weekly ones, the weekly ones. Yeah, because these trades here, my friend, trust me, do not risk that much of a capital late on a Friday taking weekly on here. That's ill-advised. So that's even here. I mean, this is a calculated move. The stock has gone up from 15. The close here was 15.59. It went all the way to 18.27. That's a lot for a stock like this. So yeah, some put as a hedge and enable us to win on both sides. All right. So that was pretty much the set of stocks that we reviewed last week in yesterday's video. That was nice. So now looking back into next week, I'm gonna be making a video especially for the earnings this weekend. So tomorrow is closed, so that should give us some rest. So for me, inside E-Trade, this is how I go about looking at my calendar of events. So maybe your brokerage has something like that. So here, Friday the 10th, there's nothing. Here's what's so the colors is before the market and after the market. So for me, if I push into next week, so Monday, I don't see anything worth of interest or anything. All of these are tiny companies, not really worth. I don't trade. Okay, J&J, a biopharma. But on Tuesday, JP Morgan. Yeah, JP Morgan, my friends, at the end of the day on my watch list was the best performer. Meaning, despite all of that selling in the end, JP Morgan did not budge. So either somebody knows something or something. The earning is on Tuesday. We will be trading them the way we trade earning. If you do not know by now how we trade earnings, I told you about that earning season. Make this guy jump like a young boy in a candy store. So yeah, we do not gamble ahead of earning, because we don't know what's going to happen. But once the results are out, yes, we come to play based on how the markets react to that information. So we will set you up with the details on that. So J&J, JP Morgan are two candidates for Tuesday morning. So that will get us started before the market open. And then after the market open, this is United Airlines. Yeah, those airlines, geez, yeah, those conference call are going to be something, right? So, and that report. So, Citibank, Goldman Sachs on Tuesday morning, and Bank of America. So, you have your choice. So, in a sense, in that way, I'm just giving you a preview. XLF is the ETF for banks, so for financial, but not just bank, all financial things. So maybe we can trade through that to get the impact of the or individual depending on what's happened on each one of them. Actually, there are four of them: Bank of America, Citi, Goldman Sachs, Morgan Stanley. Wow, that's going to be something. That's going to be something. And after hours, do we have anything worth of interest on here? I will make a list. As of now, I'm just going through, and actually, I need to wrap up on here. And then on Thursday, my favorite today to trade earnings are Wednesday and Thursday. And if you so elect to come back in the next video that we're gonna make, I will explain to you why. Until then, have a safe Easter, trying to rest with your loved ones, and we hope to see you again on this channel next time. Bye bye.